Hey guys, LaneVids here. If y'all are new to the channel, we'd love it if you subscribed. We mainly do family fun type of stuff, family travel, family science experiments, and that kind of thing. But I've been doing a little live series here where I talk about investing and money, particularly with the books that I'm reading right now. And I've been reading The Snowball, and the Business of Life, Warren Buffett and the Business of Life. This has been a very interesting book, and I haven't really gotten into it yet, but I'm ready to get into it very soon. It's a Tony Robbins Money Master the Game. I like this one because it's 7 simple steps to financial freedom, which seems similar to kind of how Dave Ramsey did. We did the Total Money Makeover with Dave Ramsey. So if you guys want to check out either of those books, I'll link them up down below. Y'all can go and check them out. Check out the reviews on them. I've been reading some good reviews about them. But I wanted to talk to you guys about the 2 things that I have discovered, I guess you could say, after while I'm reading this book, which is the Warren Buffett book. I'm about page 300 or so in chapter 32. And since reading it, I learned about value investing, how to value stocks, and using Graham's method of valuation for a stock by looking at a company's balance sheet. Now, probably a lot of you guys are like, what the heck did I just say? So basically, you want to find out what a stock is worth, and if that price is too high or too low or just right or whatever. So you go to the company's financial statement, which you can get anywhere. Just type in annual report of whatever company. And it tells you the assets and the liabilities. And there's a specific formula. I need to write it down because I don't have it memorized yet. But basically, you take the assets that a company has, the ones that you can liquidate, so the ones that are actually worth something if you were to sell the entire thing, and you take that minus the liabilities, and the liabilities is all the debt that the company has. And that gives you a valuation for the company. And you want it to be in the black, which means you want it to be making money. You don't want it to be negative. And you take that number and you divide it by the total amount of shares that that company has outstanding for its stock. And then that tells you, based on the liquidity of the company, based on what the company is actually worth on paper, how much that share should be. And then you can judge it to what it actually is right now, so you can see if it's higher or lower than the price, to see if you want to buy it or not, to see if it's a good value for you, to see if it's on sale. That's another thing that I've learned a little bit about, is finding stocks that are on sale. Look for that event that's happening that's going to drive the stock price down, because that usually puts the price of it on sale. But if the business is still good based on the asset to liabilities and how much cash they have on hand, then you know that they can rebound from it. So that's the first thing that I learned: value investing and learning how to give a good valuation. Like I said, I'm really just kind of started getting into that. Now, after doing that, I started to watch a lot of videos about Warren Buffett and just about investing. And today, actually, I got into investing in farmland. Now, I Googled on YouTube investing in farmland, and I just started watching a ton of videos. And see, look right here, investing in farmland. I literally did that today, and I probably watched, I don't know, 10 or so videos. But I found it very interesting because you look at, you're trying to hedge against inflation, which is whenever things go up in price. And whenever things go up in price, that usually means that you have a weak dollar. It means that your dollar doesn't buy as much, because milk used to cost $3, but now it costs $4, so it costs you more. So you want to find things that the investments that will not lose their wealth in inflation. So a lot of people go to like gold and silver. And the problem that I have with gold and silver, although I do own a little bit of silver, is that gold and silver don't give you a cash flow. Cash flow comes from an asset that puts money into your pocket. So if you buy a stock and it pays a dividend. That dividend is cash flowing into your income every month. Remember last video we talked about income statements and your balance sheet there. Farmland can do that because you buy the farmland. Usually over a long period of time, it appreciates in value due to construction or things coming up around the area. The value of the land just goes up because there's only so much land on the earth. So you take that you have land, it'll probably go up in value. There's no definite, but there's a good chance. And then, but on the flip side of that is that you have cash flow if you can find a farmer or a tenant, someone who will work the farm for you. And then they pay you rent to use their farm because they want to be able to sell food to the market. So I thought that was very interesting because if there ever is any type of deflation or hyperinflation type of thing, farmland's kind of secured you from both of those. Because if there's hyperinflation, all the prices of things go up. Hyperinflation, we just talked about that. Things are going to go up. So the crops that the farmer is farming will go up in value, and thus the farmland becomes more valuable because more people want those crops. Also, another fact that I heard is that emerging markets, China, India, they live on very, very low means and they don't eat a lot of protein. Well, it takes more land to get protein and better quality food to other to these emerging markets. So they're going to grow more corn, more grain, more all that stuff that cows and chickens and animals that we get meat from. They're going to eat all that stuff so they can have more cattle or whatever the farm animal is, and then they can sell that to there. And there's I think a lot of those emerging markets are really coming through now to be able to want to have a better lifestyle for themselves, mainly in the food area. So I found that very interesting as well. So I'd love to know your guys' thoughts on this. Question of the video, have you guys ever thought about investing in farmland before? Let me know down in the comments below your thoughts. Also, if you want to read these books with me, again, down in the description below is links to these books. You can definitely go and check them out. Maybe give you some alternate investing or ways to use your money advice in the books. I'm trying to learn from what smart people have done. That's my idea here. So if you guys like these videos, please click that subscribe button. Thank you guys for watching. A thumbs up is always appreciated. And I'll see you guys in the next video. Bye.